Alright, let's get right into it. Today, we're going to break down a trading strategy that's so simple it almost feels like cheating. Seriously, it's a method that reportedly made one trader nearly $500,000. And get this, she used just one tool, a tool that every single one of us learns on day one. You know that feeling, right? You open up a chart and it's just a mess. It looks like a Jackson Pollock painting with all the lines, oscillators, and bands everywhere. That feeling is called analysis paralysis, and it's a huge trap. But what if I told you there's a way to just cut through all of that noise? And this is the number that should make you sit up and pay attention. $500,000. It's a pretty staggering figure, and it's powerful proof that you really don't need some super complex system to get amazing results in the market. And here it is, the whole secret sauce. The trader we're talking about is Victoria Duke, who goes by Tori J. And she basically perfected the art of trading with nothing more than the good old-fashioned trend line. No fancy indicators, just a really, really deep understanding of how the market moves, visualized with a few simple lines. So you're probably asking, how in the world did she do it? Well, it doesn't start with drawing lines on a chart. It actually starts with a way of thinking. The whole foundation of the strategy is something called the top-down philosophy. It's all about getting the right perspective before you even think about hitting that buy or sell button. So what is top-down analysis? It's Tori J's #1 absolute golden rule. It just means you always start by looking at the big picture. Before you get obsessed with what's happening in the next hour, you have to understand the story the market's been telling for the last few months, or even years. This gives you context. It shows you the main river you should be swimming with, not against. And the process itself, it's just a logical zoom in. You start way out on a monthly or a weekly chart to find that primary direction. Then you zoom in a level to the daily chart to see the smaller waves inside that big trend. And then finally, you zoom in one more time to the 4-hour or 1-hour chart. That's where you find your precise spots to get in and out. You know, this top-down approach has a huge psychological benefit too. See, Tori J is a swing trader, so she's in trades for days or weeks. This whole philosophy changes her from being this anxious person glued to the screen into a totally calm strategist. She does her analysis, she draws her lines, she sets her alerts for when the price gets to those lines, and then, and this is the most important part, she walks away. No more stress, no more emotional decisions based on every tiny market tick. Okay, so now let's get into the practical side of things. We've got the mindset down. Now it's time to take a totally blank chart and turn it into a clear, actionable roadmap. This is where the real skill of drawing trend lines comes in. So step 1 is to set your main boundary. You're going to go to a high time frame, like the daily or weekly, and draw your primary trend line. And the rule here is super simple. You just connect as many of the major turning points, the big peaks and valleys as you possibly can. This single line becomes the backbone of your entire analysis. Right, once you have that main line, you start adding layers. You drop down to a lower time frame, let's say the daily chart, and you start drawing what Tori J calls child trend lines. You find that last major turning point from the higher time frame, and you start connecting it to the newer, smaller peaks and valleys that you see on this chart. You're basically mapping the trends within the trend. Now here is a really important tip. These lines you draw, they aren't set in stone. As you zoom in, you might find that your big, high-level trend line doesn't quite line up perfectly with what the price is doing right now, and that's okay. Tori J says you should make little tweaks and adjustments to make sure your lines are as relevant as possible. And from there, you just repeat the process. Keep adding more lines as you go down to your execution time frame, like the 4-hour or the 1-hour chart. And when you're done, you don't have a cluttered mess. What you have is a clean, simple map that shows you exactly where the market is likely to have a reaction. Okay, so you did all the prep work. You've got the top-down perspective. Your chart is all mapped out with this beautiful network of trend lines. Now for the fun part, using that map to actually find some high-quality trades. This is the million-dollar question, isn't it? You have these lines on your chart, but how do you actually use them to make money? Well, with this strategy, there are really only two main scenarios that you're sitting and waiting for. You're waiting for one of two things at your lines, either a bounce or a break. The bounce is your bread and butter trend following trade. You're watching for the price to come down, hit your trend line, and get rejected. It bounces off, telling you the trend is still good to go. The break is the total opposite. That's when the price just smashes right through the line with power, signaling that the trend might be reversing or about to pick up speed. But listen, this next part is maybe the most important piece of the whole puzzle. You never ever take a trade just because the price touched your line. You have to wait. You need to see confirmation from the candlesticks themselves. You're looking for a really strong signal, like a big rejection candle with a long wick for a bounce, or a huge, powerful candle that closes on the other side of the line for a break. That patience is what separates the amateurs from the pros. Alright, so we've covered the mindset, the setup, and how to execute. Let's bring it all home and boil it down to 4 key rules that'll help you turn this from a cool idea into something you can actually use consistently. Here they are. First, always think top down. Your analysis chart and your execution chart have to make sense together. Second, you have to respect the hierarchy of trend lines. A line on a weekly chart is like a brick wall. A line on a 5-minute chart is more like a piece of paper. They're not the same. Third, combine this with market structure. Use those obvious support and resistance levels to figure out where to take your profits. And finally, and this is the big one, you have to learn to read the momentum. The candles tell you everything about the fight between buyers and sellers right at your line. That's your final green light. So we'll end on this question. In a world where everyone's chasing the next fancy algorithm or piling on dozens of indicators, Tory J's success kind of makes you wonder, doesn't it? Maybe true mastery isn't about adding more complexity, but about getting really, really good at the fundamentals. Maybe the simplest tool in the box, when you know how to use it, is actually the most powerful one of all.